right-hand top corner that you can see is John Schmidt from Aero Law, and Nate Pietila from Aero Law in Southern California will sign in when he gets out of the traffic jam that he's in because of the fires there. So here's the video.
I'm Tom Alston, and I'm going to give you some reasons why you should always pay sales or use tax on the purchase of an aircraft or a vessel. Let's get started. Number one reason, you're a politician and you'd get recalled if you were discovered to not be paying your fair share. Two, you're a private citizen and you believe politicians can do a better job spending the money than you can. Three, the tax is nothing but petty cash to you and you don't want to do the extra paperwork required to legally avoid the tax. Four, your corporation is doing well and you don't want to be attacked by politicians for being a corporate jet owner. Five, you're timid and can't face a tax auditor. That's my job. Let me do it. Six, your wife or girlfriend will nag you for taking a risk. I have a couple of questions for you. Where was she when you took the risk that created the company that created the wealth so you could buy the vessel or the aircraft? If she was complaining about risk then, you've already proved to her that risk is worth it. Seven, you got such a good deal on your aircraft or vessel, you feel like you should share something with the government. I never feel that way. Why do you? 8. Although the Supreme Court of the United States of America has affirmed your right to legally avoid tax, you still think it's illegal. 9. The last time you got audited, you met a great-looking woman that worked for the tax agency, and you want to see her again. Sure, all of these are kind of in jest, but if you don't like any of them, you don't want to use any of these reasons, and you want to legally avoid the tax on an aircraft or a vessel purchase, call me first before you buy it.
Okay, we're getting ready to start. I see that Nate's, welcome Nate for making it through the traffic jam in Southern California. John, you have the floor.
Good morning, everybody. Welcome to this presentation on bonus depreciation. Interesting topic, interesting timing for it. We're going to talk about it, figure out what it is, how good is it, and finally, we're going to speculate on will it still be with us after the completion of the new tax bill currently being considered in Congress. So let's get started and talk about what we're going to discuss today. We're going to start out by talking about what kinds of claims there are out there on bonus depreciation, and is that the whole story or is there more to be discussed? We're going to take you through what it is, what types of depreciation are there out there, and make sure we understand and differentiate between them so we get a better idea of what's really being discussed here. We're going to look at bonus depreciation today, what the current law is, assuming no change to it. We're going to look at the companion to bonus depreciation, the Section 179 expensing rules. And finally, we're going to look at the 2017 tax bill changes, what's currently been passed by the House, currently passed by the Senate, and know full well that the conference committee that is being formed now to come to an agreement on the bill is free to change everything. So let's start in. What's being claimed by manufacturers and others? We see lots of information out there that you can save millions in if you take bonus depreciation. Lots of information out there about what your tax savings could be. Not exactly. There's more to the story than this, and part of this presentation will be aimed at trying to give you the rest of the story as to what bonus depreciation can and cannot do for you. So, what is depreciation? There are 3 different types of depreciation that we
John,
utilize.
Let me interrupt you for a second. I forgot to remind everyone you can type in, text us questions, and I'll relay those to John. John, I apologize for interrupting you.
Not a problem. Not a problem. Yes, I will do the discussion here, and I suspect Nate will answer most of the questions, so you get the benefit of both of us here. So talking about depreciation, oftentimes people get confused because we use the word depreciation for really three separate things. Market depreciation, the actual loss of value of the asset over time. Book depreciation, what the accountants put on the books of companies as an estimate of the value of an aircraft over time. And finally, what we're going to be talking about, that is tax depreciation. The deduction you can use on your taxes to reflect the wearing out of the value of the asset over time. And theoretically, it's used to match the income that you derive in a period to the deduction for the loss in value. You'll see as it relates to aircraft, that's really not realistic. We have some very beneficial depreciation schedules that really push forward the deduction, and it really doesn't match the income that's derived in that period. So looking at market depreciation first, just to get an idea, this information is provided by Conklin and DeDecker, and it's the projected depreciation, expected depreciation in value of an aircraft over time. The top line is jet aircraft, the middle line would be turboprops, the bottom line piston aircraft. You will see the jets retain their value better than turboprops and pistons. You will also see that the the depreciation drops dramatically in the first couple of years in all of these aircraft. Recent information leads us, that's come out on the market, leads us to believe that that depreciation drop, or that value drop in the first couple of years, may now be happening even faster than shown in this historical chart. Now, this is what's expected over time. We here in our firm have actually tracked one aircraft over a 10-year period to see how it actually, the market value of that aircraft changed over time. And you will see that it didn't actually follow the projected trend. In the build-up to the recession, there was a significant asset appreciation, and you can track here to see where this 2002 Falcon 900 actually rose in value, but over time, over a 10-year period, it actually came back down to the projected depreciation line. That's important because we understand what the expectations are. Market may treat you differently. Now let's look at what happens to that same aircraft when you overlay market depreciation, book depreciation, tax depreciation. They are quite different from each other, and we should keep that in mind. As you can see on this line, significant differences in value, in numbers. So what is tax depreciation? That's where we're going to focus here. It is, the definition, the governance of this is in section 168 of the Internal Revenue Code, and it allows a deduction for property used in business activities or for the production of income. And as said, it's designed to reflect the wearing out or reduction in the value of the property over time. And again, as we discussed, it's aimed at matching the deduction to the income that asset produces over time. We look at this in, so we break this down into two asset classes: aircraft used in business and commercial aircraft. So if you're operating a Part 91 aircraft, you're in the first asset class that generally allows you to deduct under a 5-year makers or modified accelerated cost recovery system, or alternately a straight line, the ADS, the alternative depreciation system. The makers, 5-year makers, is very beneficial because it accelerates your depreciation in the early years. If you are flying commercially and think charter operations, then you're pushed into a longer a longer depreciation schedule, a 7-year makers, or potentially a 12-year straight line depreciation. And this has this stretching out reduces the value of the depreciation to you. So 5-year makers program. It's aircraft used in business, and so mostly all Part 91 operations, helicopter operations, question on fractionals. If you move to a 7-year makers, you're into a commercial, so a charter operation, predominant charter use, and others deemed commercial by the IRS. Make sure I get the right chart. So what method is your company using? If your business is your predominant use, you will be in a 5-year makers or a 6-year straight line, charter 7-year makers, 12-year straight line, and each of these conventions actually, we talk about a 5-year makers, it actually extends a piece of it into a 6th year. A 7-year makers will extend a piece into an 8th year. So with all of that in mind, what is bonus depreciation? The term is not really a good one, because bonus depreciation is faster depreciation. It's not more depreciation. You don't get any more than 100% depreciation, so max you can get. It just accelerates the depreciation into earlier years. So if we're talking about a situation of 100% bonus depreciation, you get to you deduct the entire value of the aircraft in the first year, the year that you acquire it. If we're talking as today about 50% bonus depreciation, you are able to take the 50% depreciation of the whole asset value in the first year, and in addition, then you apply the 5-year makers schedule or 7-year makers schedule to that, and take an additional amount. I believe under a 50% bonus depreciation, as we'll see, you'll end up taking approximately 60% of the value, deduct 50% of the value in the first year. Now,
John, we have a question from the audience. They want to know if you'll share a copy of the presentation slides. First of all, let me let the audience know that we're recording all this video, and it will be available on the website in a couple of days. And then you would have to contact John directly if he wants to share his PowerPoint. Is that something you're willing to do, John?
I have no real issue with this. So if anyone wants to contact either Nate or me directly, they're welcome to, and we'll figure out what information they need and help them out with it.
Okay, and if you don't have John or Nate's email address, this is Tom, you can contact me and we'll get it to you. So you can continue now, John.
A key point in current bonus depreciation, it applies only to new aircraft and new products. If you're buying a used aircraft today, bonus depreciation is not part of your vocabulary. It should not be. If you're buying, let's say, new avionics, other capital investments in your aircraft, bonus depreciation can apply to that. Another point, you have to be eligible to take the maker's depreciation schedule. If you're on a straight line, bonus depreciation doesn't help you. Finally, for those of you in California, you can't deduct bonus depreciation on your California state tax return. Now, what does this look like? This is a bit of a lot of information on one chart. The key here is under the current program that you get bonus depreciation in the year that you place the airplane into service. That's the standard for bonus depreciation of overall asset classes. With aircraft, you have an additional benefit that if you have a firm and binding contract by the end of any given year, generally speaking, you can place the airplane into service in the following year and still qualify for the bonus depreciation in the earlier year. That said, there was in the latest bonus depreciation extension by Congress, they missed a piece of that, and so the result is to obtain 50% bonus depreciation in 2017, you actually have to place the airplane into service by December 31st of 17. If you roll into 2018, assuming no tax law change by Congress, then you would only be eligible for the 40% bonus depreciation that's currently on the statutes for 2018. When you get back to 2019, you're back to the situation where if you place the airplane into service the following year, you get the bonus depreciation amount of the previous year. Interesting to note, but may be very much a moot point after Congress acts in the next few weeks, assuming a bill actually emerges. Diving further into detail, the statutes treat aircraft in two separate buckets, if you will. There's a definition of certain aircraft, and when you hear that term, think business or private aircraft, aircraft used in your own business, Part 91 operations. There are a whole series of requirements here, but virtually all corporate aircraft using Part 91 for business will qualify there, as long as they're jets, turboprops. However, there is also transportation property, and that's a term that you should equate with aircraft predominantly used in charter or for airlines. And there are different rules applicable to them. There are some limitations to the adjusted basis of bonus depreciation you can take in certain circumstances. More limitations in the transportation property than in certain aircraft. Requirements for bonus depreciation. You need to have a written binding contract to qualify for bonus depreciation. And what does a written binding contract mean? IRS requirements, it has to be enforceable under state law against the taxpayer, or if this is an assigned contract, the taxpayer's predecessor under the contract. Here's one of the gotchas, or the things that people don't realize. If that contract has a liquidated damages provision, and many manufacturer contracts have them, that liquidated damage provision must be in excess of 5% of the value of the aircraft. Anything lower and you don't meet the written binding contract requirement. And another piece of this, both buyer and seller must be subject to damages as well. Seller must be subject in the event of seller's default, cancellation, or termination. And the standard fully refunding your deposit in the event of a seller default is not enough. The seller, if there's a liquidated damages provision, seller has to be at risk in excess of 5% too. So that has led to some interesting discussions with manufacturers to make sure that they are on the hook as much as the buyer is on the hook to make sure bonus depreciation.
John?
Yes.
Yeah, this is Nate. I was just going to jump in with a clarification on written binding contract. The written binding contract is important if you're trying to seek bonus depreciation for the extension year. If you want 50%, or let's say in the case of 40% bonus depreciation, if you want to place it in service in 2019, you have to have a written binding contract in place in 2018. So that's where the written binding contract comes into play. If you want to get the higher bonus depreciation level for the extension year for certain aircraft or transportation property, that's when you have to worry about a written binding contract.
Thanks, Nate. That was a very good clarification I should have caught. Let's now look at what bonus depreciation looks like. This is a 50% bonus depreciation chart versus the standard chart. Left side, left column would be assuming you place your airplane into service, and I took bonus depreciation in 2014. Just a nice example. You get 60% depreciation in the first year, and then it rolls out in the succeeding years, and you get to your, our example here is a $3 million aircraft. You get to a full 100% depreciation in the sixth year, $3 million. Right-hand column, this is the standard maker's depreciation schedule. You get to the same point in 2019, fully depreciated $3 million. You just get a whole lot of it earlier. Again, as we discussed, it's a cost of money calculation. So let's look at that. We did this calculation in the firm to try to determine what the real tax savings were for bonus depreciation. So what were our assumptions? It was a simple net present value calculation, $3 million aircraft, figure a 4.5% cost of capital, and a consistent tax rate, 35%, the current corporate tax rate. Obviously, you can change those variables and it will change your results, but the end result is the actual tax benefit, the actual after-tax benefit to the recipient of bonus depreciation turned out to be 1.3% of the value of the aircraft. Not quite the same numbers that we have seen from some of the claims under bonus depreciation, but that is clearly where we have come out in our calculation, and we'll give you other information here to give you an idea of what other reasons that could reduce that number even further. As a contrast, let's look at depreciation change, just the difference between a 5-year and a 7-year makers. As you can see here on the left column is the 5-year makers program, again the $3 million airplane, versus the 7-year makers for a charter $3 million aircraft. You get to the same point. $3 million is what you depreciate. You just depreciate it longer. Now let's look at the actual calculation of the benefit. Same $3 million airplane, same 4.5% cost of capital, same tax rate, and you end up, you're looking awfully close to the benefit of bonus depreciation just by staying in a 5-year makers, 1.09%. So there's a significant tax difference, a benefit, detriment to you if you're able to take a 5-year versus a 7-year makers. That should be something to think about as you are considering whether or not to put your airplane out on charter. So other gotchas are things that you need to be aware of when you're thinking about bonus depreciation. First one is, can you get a new, it only, at this point, only applies to new aircraft. Is a new aircraft position available? Can you qualify and get a new aircraft within the time frame to be able to obtain bonus depreciation? In some years that's close to impossible, others less of an issue. Another one is, are you personally able to take advantage of bonus depreciation? Are you making money this year? Do you have enough income to be able to use to make this deduction make sense for you? In certain cases, you may qualify for it, but not have enough income in your given year to make this useful for you at all. The next one, a big gotcha, the personal entertainment use disallowance. If you use your aircraft for personal or entertainment, recreation, and amusement, the IRS disallows any deductions related to those. That is a huge one. If you are not watching carefully, you could end up having bonus depreciation or being eligible for it, and then see a whole lot of your benefit wiped out by the personal entertainment use disallowance. Talk to your advisors about this before going forward. Look at what your actual marginal tax rate is in your bonus depreciation year. Some people have very steady incomes and the marginal tax rate doesn't vary. Other people have much more spiky income, and marginal tax rate in the given year that you take bonus depreciation could make a huge difference to you. Also keep in mind, if you're chartering your aircraft, you could have passive activity limitations that eliminate the value of your bonus depreciation. And finally, you may qualify for bonus depreciation in the year you take it, but in all of the out years when you are depreciating your aircraft, if your business use drops below 50%, you could be subject to depreciation recapture. And that can be a painful exercise Some of our lessons learned in advising our clients over many years related to bonus depreciation. Unlike a lot of the claims, bonus depreciation in our minds is not worth millions of dollars. It is a small percentage of that, and as you can see from the calculation, plus or minus 1.3% of the value in a 50% bonus depreciation analysis. So we're thinking it's a small percentage of the purchase price. There are certain special taxpayer situations where there may be a very large amount of income in a given year where bonus depreciation could provide you far more of a value, but they're special situations. Always keep in mind that personal entertainment use is going to limit the availability of bonus depreciation. And another thought is, if bonus depreciation increases the demand for new aircraft, it also can easily increase the price for those new aircraft, wiping out the value of bonus depreciation to you if you do not watch that carefully. Keep in mind, if your aircraft is out on charter and therefore qualifies as transportation property instead of certain aircraft, the two IRS terms for this, they're treated differently and you may have further limitations. And finally, some people try to use a scheme placing a green airplane into service before having the interior completed. Bottom line is, our conclusion, those types of schemes don't work. Don't try it. It will not get you where you want to go. Other things to keep in mind. What about audit risk? Our experience is the bonus depreciation, the huge depreciation expense in the first year, is an audit flag. And if you take bonus depreciation, you should plan on being audited. Our advice to our clients is start from day one under the assumption you're going to be audited. Your documentation is key. Keep all of your documentation, all your acquisition documents, all your closing documents, your flight records. Keep contemporaneous records. Document all of this, because when it comes time for the audit, this is what gets you through it without any further pain and suffering. So finally, questions for your tax advisor or aviation lawyer when you're talking about bonus depreciation. 4 big questions. Is the aircraft eligible, new versus used? Is the transaction eligible, placed into service in the correct year, or a binding written contract in appropriate form? Is your use eligible? Are you using it for business? Are you using it for charter? Or is it personal? Is it entertainment, recreation, or amusement? Are you eligible? Do you have income that can offset, where the depreciation expense can offset that income? And finally, when you look at all this together, is it worth it? For many of our clients, the answer is yes. For many others, the answer is no. It is not worth it when you do that analysis. Now, there are special situations when it comes to bonus depreciation. I mentioned green aircraft. Demonstrator aircraft, if you buy a demonstrator, that takes special review. What do you do about a fractional aircraft? What happens if you have manufactured, you built your own airplane, a kit airplane, or a sale and leaseback, or a syndication of an aircraft? Or if you take an assignment of a third party's purchase contract, there are a number of issues related to that you want to look at very carefully. We're not going to even try to address those in this presentation. Just want to highlight that those are all issues that take special consideration. Now, moving on, we're going to talk about the companion now to bonus depreciation, Internal Revenue Code section 179, which is an expensing section that you can use hand in hand with bonus depreciation in certain circumstances that can allow you to increase the value of the expensing of the aircraft. What it is it is an immediate expensing deduction instead of a depreciation. You take the expensing deduction first, and then if you still qualify, you can depreciate from there. It is for new and used capital assets, but it must be used in business. The expensing deduction is limited to $500,000, and it phases out over time. If you are qualified for the expensing, whatever the remainder is, you depreciate under a maker's schedule. And one thing to keep in mind, it only offsets taxable income. If you do not have enough taxable income, then this expensing deduction doesn't help you. A note, you qualify for this if you also qualify for maker's depreciation, and then there are limitations on leasing activities. Here's the chart that was referenced that kind of gives you an idea of what the current expensing limitation is. So in essence, if you have an asset you've acquired up to a value of $2 million, you can take up to the $500,000 expensing. It phases out between $2 million and $2.5 million. Anything above $2.5 million in asset value, and you cannot take this expense benefit under current law. Now, looking at what Congress is doing to this right now, both the House and Senate have looked to increase this expensing benefit. The Senate, it says the Budget Committee here, actually the Senate has passed this already. In the Senate version would increase the 179 expensing limit up to $1 million and increase the phase out threshold from $2 million to $2.5 million. So it gives you a greater benefit. The House bill goes much further. It increases the benefit, the expensing benefit all the way from $500,000 to $5 million, and increases the phase out threshold from $2 million to $20 million. So a significant improvement there for anybody wanting to take this expense. We now have to wait for the conference committee to see what actually comes out of this this expensing provision in the new tax bill.
John, this is Tom. I have a question about the House bill. If I look at the current version of the House bill, it looks, when you say it's in like this, the last statement about it increases 179 phase out from 2 million to 20 million, but I don't understand, where does it start to decline like the current situation does? So the way I understand that is that they can now take up to $5 million using Rule 179, but it's at 20 million that it starts to decline. Is that how it works?
The phase out would start at 20 million. Nate, did I get that right?
Yeah, this is Nate. So you get up to $5 million of 179 expensing, and then as you place $20 million of property into service, your 179 deduction goes down dollar for dollar. So when you get to $25 million in equipment placed into service, you don't get 179. You have to use 168 regular depreciation.
I got
so
it.
If you're placing more than
like the current $2.5 million versus the 500,000, and then from 2 million to 2.5, it goes down for dollar. This just increases the amount to 5 million that you can expense, but that's starting at $20 million up to $25 million. It goes down for dollar.
Yeah, absolutely. Yeah.
Okay. Thanks.
Good clarification, Tom. And of course, all this is very interesting, but academic until we see what the conference committee actually reports out and what Congress passes to know what our final benefit here will be. Similarly, and probably more important, is how is the new tax bill going to treat bonus depreciation? And again, it depends on what the conference committee reports out and whether Congress passes that. But all we can do right now is look at what the Senate and House bills have provide for this, and then wait for the next few weeks to see what Congress actually comes up with. The Senate bill.
This is Tom again. So this is a question for me. Are you and Nate willing to come back on and clarify once the Congress makes a decision and do another webinar?
Yes, I think it's important that this sets the stage for, this tells us what bonus depreciation, the current law is going forward, but we really need to come back and talk about what bonus depreciation is going to look like after the tax bill is dealt with one way or another. And so we would be prepared to do that early in the year, or depending upon when the bill is passed and we actually understand what Congress has done.
Makes sense to me. Thank you.
So let's look at what the Senate and House have done to give you an idea of what may be coming. Keep in mind the conference committee can either accept the Senate version, the House version, or create something completely new. So these are only indications and nothing more. The Senate bill continues bonus depreciation, increases it to 100% bonus depreciation for assets placed in service starting this year, September 28th, and rolling through the end of December 2023, both for transportation, property, and certain aircraft. So basically all aircraft. After 2023, it begins to decline in amount, 80% through 24, 60% 25, and so on down to 20% in 2027. More generous than what we have today, but not as generous as what the House has come up with. Because the House is continuing bonus depreciation through 2022 at 100%, but applying it to used property in addition to new property. That's a new aspect here. Bonus depreciation has always applied to new property only. Now, the House version is introducing the idea of used property as long as it was not previously used by a taxpayer or a related party. Then the House bill continues on for anything for property placed in service, let's see, prior to September 28th of 17, the current 50, 40, 30 bonus depreciation schedule applies.
John, this is Nate. They're a little bit, that third bullet is a little bit, well, it's not misleading. If you acquire, it makes a distinction between acquiring property and placing property in service. So it's a little bit of a distinction there, and it deals with that September 27th, 28 effective date there. So that's a little bit of inside baseball, but just wanted to point that out.
Very good. A note on both tax reform bills, and a very important note. Neither of them extend 1031 like-kind exchanges for aircraft past December 31st, 2017. So if you're looking at a 1031 exchange, currently you need to complete that by the end of this year, or under the new tax bills, you're going to end up recognizing gain or loss on sale of relinquished property without the benefit of tax 1031 exchange. Gains can be absorbed by the bonus depreciation as it relates to new property, but this does introduce a significant issue for aircraft owners, especially those who are looking at acquiring used aircraft, and the 1031 benefit is gone, and they're at least under the Senate bill, they would not have the benefit of using a bonus depreciation to deal with absorbing that taxable gain. A significant issue that we need to keep in mind, and many people, NBAA members, are currently lobbying Congress to extend the 1031 benefit to aircraft in the new tax bill.
John, this is Tom. are you recommending that everyone who's involved with the sales of used aircraft probably should be in immediate contact with their congressman and their senator to get this changed? Because this could have is my opinion, it will have a detrimental effect of sales for used aircraft, which impacts everybody, including the new sales.
Tom,
are you recommending?
You said it right there. I fully agree with that statement, and I would say everybody that I have talked to agrees with that statement. You should be contacting your congressional representatives now to push for the extension of like-kind exchange for aircraft in the new tax bill. And the sooner you do that, the better. It is moving rapidly in Congress, and it has gone to conference committee. The key players are the members of that conference committee. They would be the people I would focus on first, but obviously let your congressional representatives know your feelings on this point. And that essentially wraps up this presentation.
Mr. Tom, I have a follow-on to what you just talked about. Do you have a copy that you can send to me of who's on the conference committee along with their contact information?
Tom, I do not have a list right now. I saw last night the announcement by Senator McConnell of the Senate members of the conference committee. I have not yet seen a House list. Nate, have you?
No, I don't know who's on the conference committee for the House.
Can you give all of the attendees on this webinar an idea of how they can find that? Is just a matter of doing a Google search?
Yes, the way I found out about Senator McConnell is it was simply a news article where he announced the members of the Senate Conference Committee, and all Republicans, and several of them are committee chairs and senior Republicans in the Senate. I have not seen an article where Speaker Ryan has announced the House Conference Committee members.
Can you forward me a copy of that article, and I can forward it to all the people who attended?
Absolutely. After I get off we finish the webinar, I will find an article that shows that, and I'll also look to see if we've got any information on the House Conference Committee members, which I will forward to you too. Thank
you, sir. Nate, do you have anything that you want to say? John, anything else? We're only about 45 minutes in, and I tried to promise everyone around 50 to 55 minutes. So is there anything else, any personal sides, any sidebars that should be brought up to stimulate some conversation? And I want to invite all the attendees to remember that we're inviting your questions also.
Definitely open to questions right now. One of the, I think the key takeaways here is that the whole structure related to bonus depreciation is in flux and subject to congressional action. So if you are dealing with bonus depreciation, if you have an airplane that qualifies, you need to get your transaction completed this year to make sure that you know what the treatment will be. However, figure that it is going to be subject to change in the tax law that's coming up. And I guess that may be a plug for coming back and listening to us again, and when we tell you what Congress will finally have done to affect this this issue. Nate, anything on your side?
No, I would welcome questions from anybody who's out there who has any.
All right. What I will do is I'll play a little video for you all to watch. And that'll give you a chance to send us the questions.
Hi, I'm Tom Alston from Aero Marine Tax Professionals, and the question of the day is, did you know anybody when you were in high school whose goal it was to go to work for some tax collection agency so they could go up against evil taxpayers were trying to screw the government out of money. Neither did I. Never happened. Never, ever happened. No one while they're in high school has this anti-feeling, taxpayer feeling. What I think happens is a guy goes to high school, develops a little bit of interest in math, goes to college, takes accounting classes or Excel spreadsheet classes, and gets out of school thinking he's going to go to work for a big five accounting firm or sees himself being a CFO of a company. What happens is he can't find a job. So he goes to work for some government agency and that happens to be in the tax collection business. Once he's inside that agency and he spends all of his days with that group of people, there's a phenomenon known as contagion of aberration. And all of the people sitting around at lunch complaining about these silly taxpayers or these evil taxpayers or people that are trying to create these phony tax-paying schemes, and they create this force between the tax revenue agency and the taxpayers, and that becomes the thing that affects their mental approach to their job. So the next time that you're sitting across the table from an auditor and they seem to be having a bad day or they seem to be all wrapped up in themselves or their face is all scrunched up, remember that they're not on their goals. The goal that they had in high school and the goal that they had in college was not to become part of the collection arm of any government agency. They saw themselves being part of a thriving business and making things go right. So be kind to them. Thanks for listening.
Hey, John, got a couple questions while we were off. Let me come back to your presentation. One of them was, what about recapture at the other end? Do you have any thoughts or suggestions?
So did I hear that right, Tom? We're talking about recapture on the other end?
Let me restate it. What about recapture at the other end? Do you have any thoughts or suggestions that are progressively wise for us to consider at the other end?
Nate, would you like to handle that, or do you want me to?
Yeah, well, yeah, just to go over recapture, what recapture is. So depreciation is beneficial because it allows you to take a deduction against ordinary income. So you save paying tax at ordinary income rates. When you sell the aircraft, to the extent that what you sell it for exceeds your depreciated basis in the aircraft, you pay tax at ordinary income rates on that recapture. Now, tax rates are another thing that are being adjusted in this tax bill. So you may take depreciation this year and get bonus depreciation this year. If you sell the aircraft in future years, it might be recapturing at a lower rate. So that's kind of a benefit of taking the depreciation now, and the fact that tax rates are lower, you'll have less recapture tax dollars to go out. But the absence
of... Is the recapture done at the rate that would have been imposed at the year you bought it? So like now would be, what, 38% at the max, and it goes down to 20%? Is so the recapture occurs at what is the current tax rate at the time of the recapture?
I'm not sure about that. I don't think you go back and do that because tax rates are so contingent, and what you pay in terms of your marginal rate in a given year depends on a lot of things, right? So it's kind of hard to do that. That could be the case, but I don't think so. But yeah, that's a good question.
It's also going to be affected, Tom, by the new tax law. A lot of things we could speculate on or research here under current law are going to be changed, and we don't know how. So
the only thing that we can actually suggest to people at this point is just feel at this point that 1031 exchanges for 2018 forward are gone, and use that in your tax planning today, because that's the most conservative and safest planning tool, because waiting for Congress to do something doesn't make any sense.
Yeah, I think that's probably a fair guess is both bills remove 1031 exchanges for personal property. So I think it's a safe bet to think that those are gone. But we might have very significantly expanded 179 expensing. We may have 179 applies to used property in addition to new property. So that's a nice benefit there. But if you're buying a $50 million Gulfstream, you're not going to get 179. Well, let's say you're buying a $20 million, let's say you're buying a $30 million used business aircraft. I'm trying to come up with the right numbers here. Too much for 179 expensing, even under the House bill. But under the House bill, used property can get some 100% bonus depreciation. So it'll be interesting to see, how it plays out between whether used property, gets bonus depreciation, if so, in what percentage, and the impact of losing the 1031 exchanges. It might not be that much, but we just don't know. Too many unknowns at this point.
Okay, an attendee mentioned that when my video about being nice to the tax guy was playing, that the audio was suppressed. So if there's anyone who wants an original copy of that, just send me an email and I'll send you a link to it, and you can turn the audio up and down on your computer. I apologize for that. It's the first time I've tried to do that, and I didn't notice that for some reason that the sound was cut back to 50%. So I will send you a copy of that if you send me an email and ask for it.
All right. And further along those lines, Tom, I have found the names of the Senate Tax Committee, Conference Committee members, and I'll send that article and names along to you shortly to pass along. And we'll be looking at whether we have House members announced yet.
Okay. Thank you, gentlemen. I believe that's the end of the question and answer period, so we are done for the day. Is there any other thing that John or Nate wants to say before we sign off?
I'm just looking forward to seeing what Congress comes up with here so we can start to figure out how we move forward in the most expeditious way in buying and selling aircraft and advising our clients on how to do that.
What about you, Nate? Any comments?
No, I'm good. Thanks for putting this on, Tom. Thanks for inviting us. And thank you all for attending.
Yes, thank you to all of you listening, sitting through this wonderful world of tax.
All right, so that ends our presentation for the day. I look forward to any comments from any attendees. And if you want anything, you can email me directly. You obviously have my email. And if you have questions for John or Nate, send them to me and I'll pass them on and make sure that they get them. Thank you.